Bitcoin just broke back above $30,000. So is this a start of a new rally? Is the bottom in, or is this another bull trap? It's going to be a fake rally that ends up rolling over. So in this video, we are going to look at the shorter term time frame, shorter term updates. I'm going to share with you my thoughts on what I think comes next. If you are new to the channel, welcome. My name is Dirk, and you can subscribe down below. Click that notification bell after you do so you get future updates. As well, if you want to get on my email list so I can send you an email every time there's an important update or a new video published, click on the first link in the description down below. You get my free crypto masterclass and you get on my email list. And if you want to follow on Twitter, Instagram, or the public Telegram, the links are in the description down below. So go ahead, click that subscribe button right now. Okay, so what we have right now is Bitcoin trading at $30,700. It had a nice little run up. Now I can already see a lot of people saying, hey, the bottom is in, did you buy the dip, all that sort of thing. And before we look at any of that, or before we even consider any of that, basically have to look at what the chart is telling us, and it is still far from confirming any sort of bottom in the markets. So let me show you some annotations. We have a 4-hourly chart over here. Pretty much for most of May, we have been stuck in this very tight range between 31,000 on the top side and at the bottom over here about 28,600, and you can see how many times that is perfectly balanced, and every time it tricks people, it traps people into thinking, you know, we go a little bit above it and people think, oh, the bottom is in, we're going up. They buy at the top and then it pulls down and they get liquidated on shorts. And the same thing, it goes to the bottom, people think, oh, we're selling more, so they sell, and then it rallies up again and then they buy again. So this is really chopping a lot of people up. And you have to understand this range is designed to actually just do that. And you are better off not making any sort of emotional decisions based on if it hits the top of the range or the bottom or slightly pokes down below it, like you can see over here. So then you get people who are, let me zoom in a little bit, you get people who are betting for it to go up and they place their stops just below these lows. And we get this nice little wick that liquidates all these long positions over here, and it pulls right back up. And then, you know, people think it again, and then we get this little wick here below again. And then people get trapped thinking, hey, we have broken down now, we're going to go down to the bottom and retest this wick low. And then what does it do? It reverses and it shoots back to the top of the range. So anyone who is trapped here, or anyone who has panic sold, you know, and they cashed out and they say, okay, it's going down to 20K or 14K, I'm going to sell, I'm going to take the loss, and I'd rather buy back at the bottom. And then it reverses and it goes back to the top, and people took a loss. And then the worst thing is also, they FOMO back in here at the top thinking, oh, I missed it, that was a trap. And then it does the exact same thing again as it does here. It makes you think that it's going to go higher, and then it reverses and it dumps back down again. So please understand how these markets work and spend more time studying them so that you don't react emotionally to these markets when they make these impulsive moves. Also keep in mind, today is a holiday in the US, meaning also the stock markets are closed, I believe. So there's a lot of people away from the markets, meaning there's less liquidity, and it's easier to move these markets in a direction. You see this kind of move tends to happen on a weekend, and now a holiday weekend when there's not a lot of participants. It's easier to move that. One thing that is also very important to pay attention to is these leverage positions. In the crypto market, there are a lot of people who are trading with very high leverage, a lot of retail investors too, and those leverage positions, they have liquidation levels, right? When the price moves too far in a direction, then either shorts or longs get liquidated. Now, this is a cool way of seeing it. The Kingfisher, he shares these charts on Twitter for free. And basically, you can see like a heat map of where the liquidation clusters are based on the pricing. So you can see this was before the move up on the weekend, where there was a huge amount of liquidations, huge amount of positions to be liquidated that could be fetched by, say, the whales or the market makers if they push the price to over 30,000. And that is exactly what happened. You can see this huge cluster has now been taken. And as the price moves, you know, people take positions, they take leveraged longs or shorts. And the longer the market moves in a direction or stays in a direction, more and more people bet on it going a certain way. And when that is too one-sided and there's a lot of liquidations and stops to be hunted, the market tends to make these quick moves to be able to liquidate those positions, which is exactly what we've seen over here. So we got this liquidated, and then you'd have to see the updated heat map to see where are people taking positions and what is the more likely thing to do, because these liquidations matter, because it's money, like free money. People who are trading with these leveraged positions, when they get liquidated, they lose their money. Where does it go? Obviously it goes to other people within the market. So there is huge money to be made with these liquidations, and these whales and market makers move the market certain ways to be able to liquidate these positions. It's important to understand this. So you can see what the retail trader tends to do, the average person who's just investing with leverage or trading with leverage. What they tend to do is they tend to put stops just above previous highs, and that is why we see the price action move to just above those highs to take out those stops and then reverse back. All right, so here, for example, you would have had people shorting all the way down, putting a stop just above here, and then we ran those stops, you can see, and then it goes all the way back down. And a similar thing, and the market is tricky, it doesn't always behave in the same way, so it allows people to put in these short positions. You can see lower high, lower high, lower high, and people think they're winning. And then what do we have now? We've just taken out this high, we've taken out this high, and this high, as you can see. And anyone who put their stop just at those levels or a little bit above has now been liquidated, unless they added collateral or whatever the case is. But you can see that is basically how it's working. So what do we have now? Well, we have this point over here, 31,300, which is still a potential high. Maybe some people put their stop just above that. So is it likely we're going to run that? Maybe. And then we have this same position over here, so you can see about 32,000. So it is still completely possible for this market to move up and shoot up to just above 32,000, take out all those stops in this area, and then it sucks in a lot of people thinking, hey, the bottom is in, this is going up, like it's moving so fast, I missed out, I haven't missed the bottom, or I sold the bottom, and now I'm going to start FOMOing in and start buying at 32K. And then there's a chance it rolls over and goes back to the downside and still retests this wick low or lower. There is still a possibility for new lows, so you want to be careful with that. Also, we have this potential golden pocket Fibonacci retracement to look out for if we do continue and we have a stronger rally. Obviously, if the stock markets would continue higher too, we could go into this golden pocket zone, which is between, say, 34,900 and 35,500. So these are all levels that we are looking for to be able to determine, is there really a change in trend, or is this just a quick short squeeze relief rally, squeeze the shorts, trap the bulls into thinking we're going to new highs or whatever the case is, and then we roll over and go back to new lows to liquidate all those people who got trapped. Once again, after liquidating the shorts to the upside, we liquidate the longs to the downside. So could it be the start of a new rally? Could the bottom be in? Maybe. It is possible. But until we can really see confirmation in trend change with higher highs and higher lows, and until we can at least flip this level, I would say the 35 to 36K, if we can get back above there, then we can start to consider the trend has maybe changed, the bottom is maybe in, and maybe we're starting an extended bullish rally. Until that point, we can stop and reverse at any point, whether it be this level of 31K, maybe just over 32K, all the way up to 35 or 36K. And you have to be careful for that, not FOMOing in, when that is basically the exit liquidity for people, for the smart money, to exit their positions while the retail FOMO's in, and then it can roll over and go to new lows once again. So be careful of that. This is basically just my explanation. In the short term, we're going to see how the monthly candle is going to close in the next 48 hours or so. So as usual, on the first of the month, I'm going to make an analysis after the monthly closes to see what that tells us for the month ahead. So make sure you are subscribed to the channel so you do get those updates. Get on my email list, first link in the description down below. Then I can let you know once that is published, because that's also going to be telling, of course, if it's going to be a more bullish picture or more bearish. We'll see that in 2 days from now. So be careful with whatever rally this is going to turn into. Be careful that it doesn't become a bull trap, that you end up buying the top before it reverses and goes back down. Again, remember, it is a holiday weekend, there's low liquidity. Tomorrow and Tuesday, and the markets are back to normal, and who knows, this could have just been a temporary quick short squeeze that has no continuation. Maybe it has continuation, we will see there, but This is basically how I see the market in the short term. So if you are trading, if you're investing, if you're wondering if the bottom is in, if you're feeling FOMO about this little pump that we're seeing now, this is basically how I would approach it and how I look at it, and hopefully that is helpful. If you find this kind of content interesting and educational and you want to learn more about charting and understanding how markets move, how to read charts, how to be able to find profitable trade setups, how to trade, how technical analysis works, I've got a complete technical analysis and trading course inside my Intelligent Cryptocurrency membership, and that is just one of the aspects that comes with it. So when you're a member, you get full access to that. We've also got a complete 20 lesson crypto for beginners course that explains all the basics and fundamentals of crypto. I publish a monthly newsletter with my thoughts and insights and analysis, monthly video updates, and we've got a private Discord chat group in which I'm there every single day with updates and trade ideas and charts and answering people's questions. So we have more than 1,500 in the Discord. And basically you can come and join, ask questions, learn. There's a full 60-day money-back guarantee, so come and join, sign up. If you are doing anything with crypto, if you're investing, if you're trading, you need a better edge. You need to be able to have the best insights to be able to improve your trading skills, your analysis skills, to overall help you make better decisions that help you make more profits in this market. So like I said, come and learn from me. Everything I've been doing for the last years has been shared inside the membership area. I keep adding. As I keep learning, I keep adding more tutorials, more content, and you can get access to all of it. Go through all of it for the next 59 days. If you're not happy, you can get a full refund, no strings attached. So sign up, become a member, come and learn, come and join the community. The second link in the description down below. You can get full instant access, and I will see you inside the Discord. Thanks for watching. Please smash the like button if you enjoyed this content, and I will see you in the next video.